Hey guys, what's going on? October 2019, Wednesday. Market is going to be shaken up today rather badly. It's going to be a pretty interesting day. Same levels, 29.31, 28.91. This is where the fight is happening. This is the battlefield. Basically, the idea is the same. Short any bounce. When you get close to 29.31, buy some puts at the open. There's a high probability of automatic drop as soon as the market opens, despite of a temporary pop in pre-market action. The second level to observe, 28.91. If we break below this level, guys, you've got to jump in on the put side and trade heavy today. So basically the same conditions. The party is over. There's just too many damn signs that the market is about to drop hugely. Despite of the oil bounce, oil is bouncing pre-market on some hopes of the trade deal. So if that's really the reason why oil is bouncing, this oil bounce is going to resolve to the downside rather quickly. Now clearly the European futures are up, Asian futures are up pre-market, all in the expectation of something good, which is not going to happen. So at this point they are upgrading Apple stock. Apple pops pre-market, not on as significant volume as it has done so over the last couple of weeks. Roku catches an upgrade. Actually, even CMG catches an upgrade. Now, Apple and Roku are responding positively. They are up. We're going to be watching for a particular reversal in these two shares. We're going to glance at the chart here in just a second. We're continuing to buy out of the money puts, reasonably out of the money puts. Some trades still on, like the VIX calls. MTD is a new trade for the day. Domino's Pizza is a short despite of the stupid bounce yesterday. DPZ is one of the greatest shorting opportunities this week and next week. Tesla puts, CMG puts, BKNG puts, and all the usual suspects like the cloud stocks, the semiconductor stocks. You guys know what they are. So the Move 11 continues to dominate the markets. What we're seeing pre-market again. This was yesterday before this big slide going into the open. This is a very bearish behavior, guys. This morning we basically touched the 29.31 in an 11 move type formation, creating another pyramid. Basically, we're saying this pop, this bounce is going to be followed by another drop. And we've observed this behavior, right? Yesterday we looked at the slide 11.11. The prior day on the 7th, there was a bunch of moves 11s right after we gapped down. So there's just a bunch of stuff that continuously points to this move 11 on any type of time frame that you've looked at, whether it's a 1 day, 1 minute, 5 day, 15-minute chart, 2 day, 2-minute chart. They all point to a ton of move 11 formations, which resolve in a move lower, not higher. So with that said, we're still targeting this level of 28.55. Possibly we can get there today, guys. So heading to the lower part of the trading tunnel. We've been doing that for some time. We're going to continue working the way lower after we break below 28.91. Clearly these level 28.55, 28.51 are key levels, but we can actually dip all the way to 28.11 by tomorrow. So things are going to start moving rather quickly here, guys. Very important observation about earnings of Helen of Troy and Domino's. Very important stuff is going into this earnings season, which is about to start next week, that great earnings report do not equate right now, or at least based off the couple of companies that we're able to examine so far. We're going to have a much bigger, larger sample to study this next week. But right now, Helen of Troy, yesterday, awesome report. Like every digit checks out on earnings, revenue numbers, further forward-looking project, everything's awesome. Yet the company ends up, the reaction to the earnings report, a very great earnings report, ends up being in a move 11 formation. So it pops and drops and continues low throughout the day, and it looks like pre-market today it's actually trying to drop just a little bit more. So you do not see this in a strong market. When a company bids on every pretty much metric, you should not be seeing this. So yeah, this oddball Domino's Pizza move, okay, basically that one's got horrible report, clearly states in the earnings call that the growth is slowing because too much damn competition, and yet JP Morgan buys all these stocks right here. Well, JP Morgan probably had bet a ton of money on the restaurant sector, so they had to save the day. But just because they managed to save the day yesterday does not mean that they're going to be able to save the day today. Basically what we're saying, horrible report in this case, is in the reaction, initial reaction was the true reaction in this particular case, and we're going to see the stock back to this 225, 230 level over the course of the 7 to 10 days. We can see the stock drop 10, 20 bucks today, guys. Don't be surprised, especially if you look at the history of Domino's Pizza. It has this type of bounces that are followed by drops. In instance, it has drops that are followed by strong bounces. It is a characteristic of this particular stock. But what we're noticing here, if we're indeed going to get this $10, $20 drop, then this delayed move 11 formation will be completed. We think there is a high probability of that, of more than 70% of this delayed move 11 formation actually being completed in Domino's, which tells us, to summarize this, that regardless of whether the earnings report is great or whether the earnings report is horrible, expect some kind of move 11 either immediately when the company reports earnings or a delayed move 11. Use this to disadvantage because this really gives you the clue on how to trade majority of the earnings season. So here's what happened yesterday after the bounce. We had a perfect entry in Domino's when it was shooting up higher. We kept buying a ton of puts as it just kept moving higher. And finally, we hit that level and it started reversing. So this last few entries were highly profitable, and they coincided with this perfect entry level. So very high probability reversal today. Definitely, we can easily see it back to 239. Who knows? It may drop and unravel all the way to the 230 level. But after the death cross, anytime it comes to a major resistance level, which in this case is the orange line, expect a reversal lower, not a move higher. The middle finger formation right here basically tells you they continue to sell it. Even with the big move higher yesterday, this volume is nowhere close to the liquidation volume that was taking place just a couple of months ago. And if you look at these weekly chart, you see that on the weekly chart we're against the blue line. So basically, as soon as we touched the blue line yesterday, the stock started reversing. So any entry this morning right at the open out of the gate, or even any kind of tiny even little bounce, just buy puts on this thing after this multi-level top formation. Guys, this thing is set up for a nice drop right here, despite of the fake move high yesterday. Now here's the new trade for today. This is a bet against them making a trade deal. This stock will get destroyed if there is no trade deal. So $658 could turn into $675. Basically, we're targeting an easy $50 to $75 drop here, daily drop over the course of maybe 24 to 48 hours. We could see a huge drop in the stock. And you see it's actually capable of big drops like this. If you examine some of these two-day drops, they equate to, in certain instances, $40, $50, $60 in the stock. So it's nothing new for that to do so. Look at this drop from 6.25 all the way to 5.10. I mean, that's over $100 drop. Now this one happened over the course of like 4 or 5 trading days. Look at this drop from 8.25 to 6.50 consecutively. So this stock is the right type of stock. Just understand, if you're buying options, it is a high price stock. It doesn't have weekly options. They're going to be pricey, and just understand, don't expect immediate results, immediate gratification, because you may have to stay in this position to actually lock in like some of the 400 or 500% gains. You may have to stay in this position for about 3-4 days in order for it to make this overall move possible, but it does not mean it cannot do it all in one shot. I think the probability is there, but you got to be patient, guys. Semiconductor stock puts is still very much on. The charts continue to deteriorate, so short them on the bounce. I didn't insert every one of them here, but just to give you an idea, the favorite is AVGO. This death cross is getting terribly close. We're about to cross. Yesterday, we finally retouched that level of 270. We didn't break much below that, but all the signs of a further reversal lower are here. Once institutions are running for the exit on semiconductor stocks, this is the one that will drop the most right here. Yesterday was meaningful. It was important because it gapped lower. It couldn't close the gap on the way higher. It stayed down on slightly higher volume. When you combine this volume with this volume right here, it just looks beautiful on the chart. It looks like it's ready to drop like a rock right here, guys. It is official now, staying longer under the orange and the blue line, on the both moving averages line. When stock does that, it is a predecessor to a bigger drop. Here's what we're observing: this Roku shares up on the upgrade, but we think what we've observed with a lot of other stocks, once they get upgraded and the target prices get lifted or slashed, they actually drop. So we're going to be watching. It doesn't mean we're going to be trading Roku, but we are going to be watching Roku for a potential reversal, like another move 11 type formation. That's right. So potentially you're going to be drawing this, another move 11. Doesn't mean it's going to close this gap. Don't expect it to drop to 108, but can easily drop. Let's say it opens at 112, 113, it can easily revisit the level of 110, 109, which would be a move 11 here, which could intensify over the course of the next day or two. Apple, same thing. It pops and looks like it's set up for a move 11. If you look at the chart of Apple, here's your move 11. Here's another one. Here's another one. Now, guys, and looks like we're set up for another one. I think it's pretty clear from the chart of Apple. If Apple cannot move higher and take itself to all-time highs on this upgrade right here, guys, the rest of the market is not going to be able to move substantially higher. Yesterday on October 7th, Tuesday, I'm sorry, this should say October 8th, Tuesday. It was a move 3 with an 11 characteristic behavior. This is why we logged it in as a 3, guys. Initially, we gapped down about 18, 20 points, and then we continued lower through the rest of the day. Now, the reason why we're also assigning the move 11 behavior along with this move 3 is because after the gap down, if you focus on this second half of the day between 12 and 4, then you will clearly see this pyramid formation built out. So it's a move 11 within a move 3 formation, which is highly bearish. 2-day sequence also shows you the same thing. So we got a move 3 formation with 11 in it in just a 1-day chart, but overall the sequence is also 11-3. So it's a combination of a moving top with continuous moves lower. This is how it looks on the chart right here. Move 11 followed by another 3 with 11 in it. Beautiful thing right here. 5-day sequence, 3-8-1, 11-3, guys. Yesterday I sent out the group of the message. Next move could be a 3-2-3 kind of thing. We're actually very much set up for a move 2 pre-market today. We think this is exactly what's actually going to take place. If you take a look at this 3-8-1 11-3 sequence, guys, you will notice that over the last 4 days, if you take a broader look at this chart, you will notice that this is a move 11 over a longer time frame. So we're seeing move 11s on 1 day, 1 minute. This is a 4-day move 11 right here, followed by a bearish sequence. We're noticing that 11 dominance pre-market is there. That puts a super huge probability of today being a huge reversal day in a move 2 formation. So what we're really saying, there's a high probability of a sequence after the prior 2 days being 11-3. We're thinking there could be a super awesome sequence right here, which will result in 11-3, today being a move 2, and 2 more days of being a 3-3. So that could take the market all the way down to 2750, which was our target initially. So the history, we've studied that, point to a couple more moves lower here. VIX is nicely strong above 16. So it's numerically high. It is up trading, therefore we keep buying puts on any type of bounces. Yesterday's levels on VIX was 19.1, 18.6, 20.38. So we're finally above 20. Yes, VIX is slightly down pre-market, but that's likely to be reversed. Watch for this level in the VIX of 20.38. As soon as we break above yesterday high in the VIX, the market will drop like a rock. So all of these type of formations, guys, they're bullish reversal candles everywhere observed in a 2-day, 2-day chart on VIX, basically telling us the next move is higher, not lower. Key takeaways from today: start buying puts at the open short. Any intraday bounce to 29.31 or closer to that area, buy some puts at the open and stair step. Okay, if the market breaks under 28.91 by 11:15 p.m., it's time to get very serious, guys. Trade big, put some huge position if we break below this level, because the next stop could be 27.50 within 48 hours. With that said, trade like a rockstar. I'll catch you guys on the next trade soon.